And let's go ahead and play this out real quick, and you guys will see what exactly happened. All right, boom.
Yo, welcome back everybody. Man, you all have been absolutely amazing. I appreciate all the love and support I've been getting, and don't slow down. Hit that like button, hit the subscribe button, hit the bell, man, because the more love and support I get from you guys, the more I want to release content for you all. So that being said, let's just dive right into the video. I'm going to be going over NZDCHF. I'm giving you guys a top-down analysis. I'm breaking it down from the monthly to the 15-minute time frame. Nice, short, and sweet. A crystal clear opportunity that happened on this pair earlier this week. So let's jump over to my computer and check it out.
All right, so let's dive right in. NZDCHF had a beautiful play this week, and I'm going to give you a quick top-down analysis to show you guys a beautiful entry that you could have capitalized on earlier this week. So let's just dive right in. Now, first things first, top down, we're starting on the monthly time frame. Guys, you hear me say it time and time again, you must start on the higher time frames. If you can understand what the higher time frames are telling you, then you will be able to understand where the market wants to move to next. All right, so looking at the monthly time frame, I'm just gonna zoom out real quick. You know, all the information over here in the past doesn't really matter at all, but I just wanna show you real quick. You know, a couple months ago in March, we had an all-time low on this pair. As you can see, it swept all the money below all these wicks, just an all-time low. So this is something we were looking at. This is something that we wanted to take note of, okay? And when we had this big push down, where was that last down candle before it reversed? It's right here. Let's go ahead and identify that on the monthly time frame. I'm gonna mark up the open and the 50% of that candle. We're going to be very specific today, so let's take that Fibonacci and let's get that 50% right on point. Boom, as you can see, let's mark it up. Perfect. All right, now as you can see, we came in here and we played in here this month. Now we're going to jump down to the weekly time frame and check it out, see what happened. Now this is something you guys need to notice, and this is called Confluence. This is when multiple things line up. Okay, so as we are looking at our monthly zone that we currently have, you can see we have a down candle before the up move that took previous liquidity over here on the weekly time frame. So notice we have a weekly institutional candle right in the same exact area as where we have a monthly institutional candle. That's Confluence. That's just an extra confirmation that this is a high area that we want to look at, an area of confluence. Now let's go ahead and mark this one up as well. Obviously this one is going to be the same as the other monthly because they're right on top of each other, but we're going to mark up the 50% of the weekly as well. Let's go ahead and label that. All right, so from here we could jump down to the daily if you wanted to. You know, going to the daily, what stood out to me is going to be this down candle right here. All right, this down candle is that last down candle before that ultimate move took off and skyrocketed up to the upside. However, what you need to understand is once we mark up this daily candle, right, we have the open, we have the 50%. I'll mark it up real quick. All right, we got that all marked up. So what you need to understand is our zone is a big zone. Okay, we could be looking anywhere for a buy opportunity from the beginning of the monthly institutional candle all the way down to this 50% of the daily institutional candle. Now, why is that? Well, just because it comes into the monthly zone doesn't mean it's going to reverse right away. It could come all the way down to the daily and reverse and still be reversing in the monthly institutional candle zone. Okay, so if you just increase your zone, I'm going to take this and we're going to draw it all the way to the 50% of the daily institutional candle right here. So from the open of the month all the way down to the daily 50%, that's going to be our zone where we're going to look to capitalize on a trade. Now you don't want to just go ahead and enter once the market comes back to the open of the monthly, because if you entered there, you know, your stop loss has to go below you know, the last institutional candle. So if you entered right over here, you're going to have a huge stop loss. a 220 pip stop loss. Nobody wants to risk that much. So what are we going to do? We're simply going to be patient. We're going to wait and let the market do its thing. Once the market comes into our zone, no matter where it is, whether it's here or down here, it doesn't really matter. We're going to patiently wait, and we're going to look for the schematic to play out. We're going to look for liquidity to create itself. We're going to look for that liquidity to be taken. We're going to look for that institutional candle to play out, and then look for that retest, and then go ahead and capitalize on the opportunity. All right, so let's go ahead and let's jump down to the 4-hour time frame real quick. And as you can see, I don't have the monthly marked up on here because I am on replay mode, but the monthly zone that we're looking at is right in this area. Okay, I'll break it all down to you once again after I show you this. So looking at what we have going on right here, you guys can clearly see we have all this liquidity sitting right below these lows. And what happened? Okay, we had this big push down, and what candle pushed through to take that liquidity? This candlestick right here. So let's go ahead and identify this candle. We're going to mark up the open in the 50%, and we're going to drag that out into the future. All right, so if we were to go ahead and play this out a little bit, you guys can see exactly what happened. Okay, the market shot up, kind of consolidated, and made its way down, and it didn't quite come perfectly to this 4-hour institutional candle. One of the reasons why is because there was no imbalance, and there was some things right in this consolidation zone on the hour time frame that I'll show you in a second that played off of that. Okay, so if we jump down to the hour time frame real quick, you guys can see this is that area we were looking at on that 4-hour time frame. It was right in here. This was that 4-hour institutional candle. As you can see, it quickly came back and played in there right away. So you could have entered right there. But if you missed that opportunity, what happened was it came in here and it consolidated. Okay, and within this consolidation, before it actually took off to the upside, you had this nice down candle right in here. So if we would identify this down candle right here before the up move, remember we had the liquidity over here, right? This is an area that we could have played off of. Your stop loss is going to go right below these lows. It would ultimately look something like this. We would be buying when it came over to here. Stop loss right below these lows, you know, risking about 30 pips. And your take profit is going to be, take profit 1 is going to be these highs. Take profit 2 is going to be these highs. So let's go ahead and we'll put this out to take profit 2. So in this scenario, you're going to be risking about 30 pips to make about 75 pips. And let's go ahead and play this out real quick, and you guys will see what exactly happened. All right, boom. So as this played out, we patiently waited. You know, some time has went by. We just wait, we wait. Once it comes to our area, we go ahead and we capitalize on it. As you can see, it came to our area twice, gave us 2 times to enter, and then it took off from there. Now, if you were to break this down into a smaller time frame, which we're about to do right now, and you missed this initial entry, let's see if there was another entry that we were able to capitalize on. Well, this is that picture perfect entry. Let's get rid of this real quick. You know, that picture perfect entry would have been either off of this wick right here or somewhere in this consolidation phase right here. But notice this. Okay, we had a high right in here. Notice this high. Okay, we created a high. It came back to that zone and then shot up and it broke that high. Once it broke that high, you could have been looking at these consecutive down candles right in here, right? If we look at these consecutive down candles, let's mark them up and consider them as one whole candle. So I'm going to take the open all the way down to the close. All right, and let's identify the open of that candle, and we will also identify the 50% of that move. All right, so this is an area you could have been looking to enter in if you missed the initial entries over here. Okay, so let's mark this up. Boom. All right, you missed entry 1, entry 2, entry 3, not a big deal. You saw that high was broken, you waited for the retest, the pullback, and your entry would have been right in here. And the crazy thing about getting the entries on the smaller time frames, in this scenario, if you wanted to be a little bit more conservative, you simply could have put your stop loss right underneath these lows. Okay, and if we had that same target, about 75 pips out, perfect. And as you guys can see, now we're risking 10 pips to make 75 pips, and as you can see, it smashed our take profit pretty easily, going back all the way to that take profit 2 area, which I believe it smashed as well. Boom. And I believe it is still continuing its way to the upside. All right. And the main reason why is because, go back to that monthly time frame that we were looking at originally, and you can see that bounce that played off of this monthly institutional candle very clean. Ultimately, I would expect this to possibly come up to this candle right here and maybe even run out these highs over here. If it does, expect this thing to start trending up long term, taking out all these highs that you see within this downtrend overall. But guys, that's that top down analysis. I'm going to show you guys real quick on one chart. We're just going to jump down one step at a time so you guys can see. There's the weekly, there's the daily. Let's jump to the 4 hour so that way you guys can see everything. Now looking at the 4 hour, you see the zone, this gray zone we have marked up. You see how clean it came perfectly into that monthly institutional candle. But when it came in, we were patient. We didn't just enter right here. When it came into our monthly institutional candle, we were patient, did not enter at this time. However, we did make note of the relative equal lows, had to push up, push down immediately. After it pushed down immediately, it took liquidity right below these lows and then just shot up. All right, so that candle right here was that candle we were originally looking at in the 4 hour time frame. And this is the candle that we would be playing off of. If you missed this first entry right over here, we were then looking at that consolidation within that range that initially played off of it. This consolidation range right in here. You take that down candle within there, and boom, that was that picture perfect entry for a 30 pip risk to a 75 pip profit. And as you guys can see, she's just continuing to skyrocket. You know, if you're still holding this trade, you are now currently up over 150 pips. And that right there is a quick top-down analysis of NZDCHF. I appreciate each and every one of you guys for watching this video. If you guys have any questions, shoot me a message, hit me up on Instagram. I would love to help each and every one of you guys out. But I am out. Have a great day. Stay blessed and see you guys soon.